Friday, October the 25th of 2013. My name is Miguel Vences, trader, mentor, and analyst here in Grok Trade, and this is the weekend edition, a week that has been really interesting, that we've spent basically at levels of resistance, weekly resistance and daily resistance and monthly resistance in the S&P 500. So it's really a very important week for the near future of the markets, which, as we know, have been in this crazy run up. They are overextended, but this week they just simply refused to go down. So that is in itself a sign of some strength. The question is whether this is enough strength to launch a new rally above resistance. That's the real question, and that's something that we are not, or we should not, as savvy traders, try to anticipate or to predict, but just simply respond to what the markets are giving us as confirmation. By the way, before I forget, I am really excited that I just bought my plane tickets to Las Vegas for the mentorship in the Traders Expo. So if you are a part of that group in Las Vegas, I guarantee you will have an awesome time, and I'll be thrilled to get to meet you, as well as all the other mentors of Grok Trade. Check your inbox. A really great offer went out yesterday. You should take advantage of it. It's a great offer, but it has an expiration date, so make sure that you check your inbox. But let's go back to the video. And today, moderate gains in the Dow and the S&P 500, 0.39 and 0.46%. Nasdaq 0.26%, and Russell's slightly down 0.18%. The VIX down. Not enough to confirm this move, but we have entered this week in a sideways move, and that may be reflected in the under par movement of the VIX this week. Now, this is a graph, a weekly graph of the S&P 500. The yellow lines are my weekly trend lines, and as you can see, we're in this upside channel. And we have basically been going from support to resistance to support to resistance to support to resistance to support to resistance. And today we're closing right above that level of weekly resistance. But it is not very decisive because we are in a trading range the past 4 days. So until that range is resolved, we can't really decide anything. But the important thing about these yellow lines is for you to see how important and relevant they have been once, twice, 3 times, 4, 5, 6, 7 times. And so therefore we are at a very critical moment as the trend line is growing in age, and that's precisely what this trading range is supposed to be trying to decide. So for the time being, in the S&P 500, we have some level of indecision. And here's my daily graph. The levels to watch in this sideways trading range will be 1760 to the upside, and to the downside somewhere around the 1740. And of course, ideally, this line of daily support. The white lines are my daily supports lines, trend lines. The yellow ones are weekly, and the pink ones are monthly. Dow Jones daily chart, slightly more bullish than the S&P 500, so we could still have in the Dow a bullish beginning of the week, which might be the time required for the S&P to continue to consolidate. Nasdaq trading completely above weekly and monthly trend lines. So it is definitely bullish. And on the worst case, of course, it's got these 2 lines of support, which are the weekly. The yellow is the weekly, the pink is the monthly. And of course, by the end of next week, by Thursday, this pink line will be very important to the near future and even medium-term future of the stock market, at least for the Nasdaq, because it is a monthly line of support. So whether we close above or below will be important, even though we already have 2 months that we have closed above it. I will correct myself. The previous chart was a weekly chart. So 2 weeks out of the month, we have closed above the monthly line of resistance. But as we can see in this chart, the candle is not static yet. So it is very important for us to wait until next Thursday, the end of the month, to figure out whether we will close. The Nasdaq will close above or below this monthly line of resistance. Russell's closing the week. This is a weekly chart, so closing right at the level of resistance. So this is very important because we have the 2 indexes, the big cap, the S&P 500, and also the small cap, right at levels of resistance. The Nasdaq slightly above resistance, but also the Dow, it's getting close to resistance. So that could be the potential perfect storm, whether to go down, because that would align all the four major indices, or if there is enough strength in the economy, in the markets, to go up, but all four indexes at once. So potentially Monday and Tuesday, unless there is a catalyst, some kind of news or something, it could be somewhat slow until the indices catch up with each other. Ideally, for us to launch a new move to the upside, we need a moment of consolidation or at least some kind of retracement. So this week, that bull and bear list will be very, very important, because it could go by the beginning of the next week, it could go either way. But if nothing else, we'll be able to get some interesting setups, because the past week it was a little bit hard to find some of those setups, because a lot of the stocks who were mimicking the indexes had 3, 4, 5 bars up in a row, and it was just impossible to chase some of those entrances. Now let's pay some attention to the potential market mover news coming out next week, economic news. And on the 29th, we have retail sales, very, very important report. PPI, Producers Price Index, also a market mover. And later on that morning, consumer confidence. And by Thursday, the end of the month, the initial claims, a reflection of the job market in the United States. So potentially some news that could move the markets, that could be that catalyst in one direction or the other. So make sure that you are checking on that. Thank you for watching. Have a great weekend and a great beginning of the week next week.